All right, guys. Sam here. Middle of the day, September 22nd. Thought it might be a good opportunity to do a quick review of some of the majors and look at what we see happening across the entire cryptosphere as we head into the weekend. I want to make the point that there are definitely times where the best place to be is out of the market or not looking to put on new positions, and that's pretty much what we're seeing today. We have a lack of resolution, and that's kind of creating a bit of a wait and see scenario where we've got to get more clarity from what's happening in the markets before we can put on any new trades with any conviction based on probabilities and most likely path from what we can see the markets are doing today. So I just want to recap a few things. We'll evaluate some of the altcoins that might be creating opportunities for the coming weeks, and just kind of recap the majors here. So let's start with Bitcoin, and we'll kind of break it down and see what some of the challenges we have here. So it's looking tougher and tougher for the bull camp. We are not. We can't completely count out the possibility of a retrace simply from the 50s. Right. So I've got a 4-hour chart on Kraken. This is what we've been using most recently. So we see our nice impulsive structure here, and we've been correcting that. So we've got some challenges here that create confusion, right? So when you're not sure and you don't have conviction, best place to be is out of the market. So the challenge we have here is that we have this three-wave corrective action here that creates the possibility that rather than an ABC, that we have a 1, a 2, this is our big impulsive 3, this is the 4 correction, we're starting some sort of 5-wave sequence down. And if we break this down in a little more detail, if we take it, let's go to a 1 hour, we see some of the challenges that we've got here. So if indeed this is an ABC and we're going to head down in a 5-wave sequence, well, we know markets trend in 5s and correct in 3s, and what we're seeing here now is a 5, a 3, and a 5, which tells us that at least at this moment in time, the trend is down. So I'm going to put these on here to try and help clarify it. So we can see we've got a 1 wave here. Here's our 2, and we're in some sort of a 3 now. 4 comes back here, and then maybe our 5's here. I'm going to put the wave on it just to kind of help clarify. I know there's a lot of stuff on this chart. Okay, so if indeed this is the count that we're experiencing around it. If this is what we're seeing. Well, part of what gives this validity is that we've got an impulsive structure within this third wave, which is exactly what you'd expect, right? In a third wave, we expect to see an impulsive move. So we can see very clearly, we can carve out, there's our 1, there's our 2, the big move down here to the 50, right? We went to the 50, that was the 3. There's our retrace into the 4, and now we've completed a 5-wave structure, setting up very nicely for a 4th wave here, and then the completion of this move down to the 5th. So we can look at this and say, all right, well, if that's our 2 and our 3 is complete, possibly it is, all right, because we're hitting the turbulence and the reaction that you'd expect right around the 50 from the low to the high here. So we're seeing that reaction, which suggests that we might have a pause in the market, if nothing else, and nice symmetry to complete this third wave here, if indeed it is complete. We can't really determine that yet, but potentially here we can start measuring. So if we look at, I'm gonna take this off just so we declutter the chart a little bit. Okay, so I'm going to take that off too. Okay, so 1, 2, 3, we come up. Where's the most likely for our 4 is going to be between the 38 and the 50. Here's the 1. That would invalidate the count, at least the impulsiveness of the account, or of the count, right? So we could have we could have an ending diagonal if we get that, but right now the most likely outcome here is that we retrace into a 4. We get this little window, if not right at the 382, right up to the 50, which would contain the invalidation point of the 1, and then we go down one more time. We look at, if that is the case, if our next opportunity for a short, where we incline to be sellers, would be here between the 38 and the 50, looking to come down, just off the fib draw, we'd look for it to come down to the negative 23, which would put us at right around 3,400. So that is the preferred count right now because of this impulsive nature in this 3, implying trend is down. If we get a little 3 wave here, then it just looks stronger and stronger and stronger. Now, if you take note here, I'm going to put this back on so now you can see where it came from. So if I go from this low up to my high here, you can take note here that here's our 618 and our 65, which is the pocket we often see the market respond to. The negative 23 happens to line up almost to the dollar with the 65. All right, so this is a likely point that we're going to test. Now, a reaction there, creates some alternate scenarios. But right now, what we can expect is maybe a bounce off of the 50, retrace, we come back down. Okay, if that's the case, then if the trend is down and we're going to retrace from that, remember the market corrects in 3. So if we go here and we look at this and say, okay, well, we've had this very clearly defined 5-wave sequence up, and here's the ABC as we have it counted out now. Well, if this turns out to be a 1, 2, 3, 4, and we go down to a new low, that's a 5. Right? We don't correct in 5s. We correct in 3s, creating the probability that what we have here, I'm going to have to reshuffle this. Then we'd have an A down here, right? So we'd have a 5 wave in the A, which would, let me put the wave on that. Right? So it has to correct. It has to correct in 3s. Can't correct. This move here cannot be corrected in a 5-wave sequence. Right? At least in Elliott theory, right? I mean, anything's possible. But if we're going to stick to the roadmap here that we use to create higher probability trade scenarios, we stick to the rule set. And we know that 5-wave sequence can't correct in a 5. It's got to correct in a 3. So if we get 5 waves down, the only alternative here is that we have an A in place. Then we get a big B. Then we get a big B, and then we finish in a C, right? So there's a scenario right there. I mean, that could be what we're looking at. We'll get the 3-wave correction in B, and then we'll go down one last time, completing a 3-wave correction of this entire 5-wave sequence here. That right now is a very real scenario. Very real scenario. We've got to allow for that possibility. And we won't know until we see what happens. I mean, we're going to get some tests here over the weekend. So here's a logical test right at the 200. We're going to go down and we're going to, here's the 1, right? And the shelf here that provided the resistance, or pardon me, the support, the prior resistance gave us the support back here. Do we go back down and we retest it? Very, very reasonable scenario. Very reasonable. Right, then a big reaction off of that, potentially setting up again, then one last move down to complete the 5-wave in a 3-wave correction. Right, those are real scenarios. We're not going to know until we see how this plays out. Okay, if that's the case, then this is A or 1, or we just won't know until we see more information. Right, so the market is giving us clues, but not enough to where there's a real trade. We certainly wouldn't want to be looking to buy here. Okay, looking for a buy, trying to catch the 4. Some people might take it just off the fact that we're in between the 50 and the 618. But we've got 5-wave structure here, implying trend is down. So a little three-wave counter. I would suggest to you the better trade here is to wait, see that, and look to sell the 4, right? You know, we try and catch 2s and 4s. So much as I would hate to be on the bearish side of Bitcoin, you know, you got to trade what you see. So if that sets up, that's a very real scenario to catch a 4 leading into a 5. You know, looking for this 3,400 zone. Let's go over to Ethereum and look at that, if I can find it. So, yeah, okay, so I've got Ethereum Classic over here, and then I've got Ethereum, the main Ethereum over here. This is the 120. This is a 2-hour on Kraken, so we can see it. And we've got a similar scenario happening here. So you can see we've got the 1-2. We've got the potential for this 5th wave coming down, which would imply it gets a little more complicated here. So if we're going to go down here, and this could potentially be a 1 of a 2, 3, 4, 5, and we're going much lower, right? So right now all we can see is that we've got a clearly defined 3, 4, and a retest down here for the 5. If it stalls here at the 618, which would be reasonable, that certainly we're going to get a reaction there. And if we start to move back up, then we got to reevaluate and say, if this is an ABC, we can get into a complex correction. We could have a larger, we could have a WXY of some sort, which is just a way to connect two ABCs. So we could have the ABC down here into a W. There's our X wave, and then we get an ABC here. It can get complicated. And we don't really need to worry about that. We don't really need to get caught up in trying to get every nuance of the count. From our trading perspective, we're looking at fibs, and we're looking at whether or not we can define at least where the intermediate trend is based off of either impulsive or corrective behavior. So right now we got a very clear 3-wave corrective activity here into the 50%, right? And then this 5-wave structure unfolding would tell you that at least in the intermediate term, the trend is down. So we want to see, do we break the 3 here, implying that we've definitely got a 5, and is that a 1? Is that an A? We just no way to know. So again, best place to be right now with Ethereum is likely on the sidelines. If you're not in the market, I wouldn't be looking to be a buyer here. As a straight fib trader, yeah, you could take it. Now you're coming down for a second test of the 50, but I think you don't have why. There's no need to, unless you're jonesing for a trade. There's no need to take it. The probability is not there for you. We don't have good structure. It's kind of a guess. Better to not take it. What's dominant? This 3-wave structure here. That implies correction, which implies trend continues lower until we see evidence otherwise. All right, that's the 2 majors. Let's go. I thought I would just quickly take a look at Dash. It's been this is Ripple here. I've got Dash. Here it is. I wanted to show you this on a lower time count. Okay, this has been incredibly technical. All right, this kind of makes the point that I was trying to emphasize with the larger picture of Bitcoin, implying that we've got to have a 3-wave correction rather than a 5 correcting a 5. Can't have that. So this is the 1 hour on Dash, and it's been incredibly technical. It's been just beautiful trading. So here we can see in purple, you've got our 5-wave sequence here. This is the impulsive move, and now we've had our first corrective action down here. Here's our A. We've come up to a very nice B. An internal retracement, right? We stay now. Likely we're coming back down for a C. So there's potentially a buy setting up here. And here are our likely targets here. We've got the 100%. So if I put the wave on it, okay, A coming down for a C. So likely targets, 100% of the length of A projected from B. That's a very real target. There's the 50 of the entire move down, and then here's the 1272, which is another high probability target for a C wave relative to an A wave. So we got a nice little pocket here where we might have our next opportunity to get long in Dash. So that's one to just put on your radar, look at it, but I wanted to make the point to show you that we need a 3-wave correction of a 5. We don't correct a 5 with a 5. And if we do, it's just a much larger correction, and that 5 that you see is just an A wave. Right? Got to stick to a rule set. So this is one to absolutely watch. I'd put an alarm here at about 3:05, see when we start to come in. If we get down to this 100%, I'd be looking for signs of a reaction there, and maybe partial entry on the 100 and secondary on the 50. Stop might be on the other side of the 1272. Right, so that's a potential trade setting up. Then just to round this out, since we're really not setting up new trades, we're just kind of analyzing and see what we can find possibly over the weekend or going into next week. I went over to our list here just to see what we could see, what was moving today. And this is against Bitcoin here. So, Ethereum up a little bit today, interestingly, up a little bit. Bitcoin Cash, these are quiet, but I came down here and I was looking for something. Well, maybe I can find something that's up a little bit today, but that has been correcting. So I saw IOTA here, which is one of our majors. I think it's in the top 15 over on CoinGecko. So I brought that up just to take a look at it, see if we can determine anything. It's actually been trading incredibly technically. So let me just show you this. Just if nothing else for a lesson. Okay, so if we go just as we would always do, we look up here, there's our full retracement. We had some sort of a 1, a 2, giant 3, deep 4, up to the 5. Right now we've broken all of this action. So trend change clearly. So how do we do on the way down? Do we see algo footprints here? So just drawing them off, right? So here's our first low. Well, we get to the 786 to the tick, which is common on that first reaction. It sets up a classic a technician would say, okay, well, there's a head and shoulders. There's a failed attempt at new highs. That's a B wave that will hit on the 786. That's why you got to pay attention to that 786. That you'll very, very often see markets fail there in a push to get new highs. So then we come back down. Then there's the 50. There's the reaction. Then we go right into that little window that you see all the time. If you've been watching my videos, you see that all the time, and it's the stop run just on the other side of the 618. So you get that little wick right between the 618 and the 65, and then we start down, and then we get a new low. That's up to the 50 down. That just screams lower. We even blow through the negative 618. If we take that. There's a negative 6.1, or what was the new low here, up to the 50, back down. Let's do it again. It's just unbelievable. There's the little pocket between the 618 and the 65. Boom, right down to the negative 23. So just, from there you get the reaction. Now we're back at the 50. So, at this point, we've got deeper targets down here. So if we go all the way down, look at it. There it is again. 618 to the 65, right? It's just over and over and over again. So where the longer term targets are definitely much lower. So you're hitting what you'd expect here. You're hitting support right here. We got to the 618. We get a little reaction. Got to get through that. If we get through that, we're going down here and then potentially all the way down. So that's a major retracement. So I guess really just showing you that algos are all over this. It's just a matter of, I'm not trying to put a wave count on this. You don't really need it. Just the fib pulls here have been stunning, very profitable. Just to wrap it up here, I'm trying to keep this under half an hour. I went over to the dollar, just looking for stuff I could see here. Oh, I came up with NEO was one that was a huge. Look at these numbers. We're just insane performance, and I happen to see a post on on Twitter this morning is someone saying, "Oh my God, I can't believe Neo's down to 17." So I said, "That's curious. Let's go look at Neo. Here it is. Here. How is it possible that it could be there?" Well, let me get the chart up here for you. So, all right, I mean, I'll just recreate it for you. So, monster run, right? So we 3, 4, 5 up into a 5, and then we get some sort of a 1 here. We get an A, B, C. So you can start to see this start to define itself on the way down. So if I'll take these off just to make the point. Here's our high. Here's our low. Up to the 50. Down we go. Pull it again. From that, there. You can see actually from this pull here to the 50, we've actually just recently gotten to the negative 618. That's why it's worthwhile to come back and check those. Well, there's the 2 to the 3. What do? Right into that little pocket. Right in that little pocket between the 618 and the 65. You see it all the time in the markets, which is why your stop cannot be just on the other side of the 618, because you will get wicked out. And look at the reaction we get. So we clearly get a nice 1, 2. There's our impulsive 3. There's the deep retracement into the 4. It overlaps. So this has got to be an ending diagonal if it's going to be corrective. Well, it could be a leading diagonal as well of an A wave. Definitely possible. So where's our target? What's the probability? Can't believe it's at 17. I can't believe it's not at 10. Right? That's the likely next target. So if we pull it again last time off of this into this low, well, up to the 50, we got a little overlap here. I wouldn't buy that. I wouldn't buy that until we get down here. Just beautiful technical trading. It's just as good on the way down as the way up. I know we all have that bias to the upside because of the insane performance that we've seen in crypto, but when the market starts to turn, you can't be afraid to get on the short side of it, especially when you see something like this trading so perfectly technically. Last one, I just had a couple others here that I thought I would show you. This is the one we were talking about yesterday that's setting up so nicely. We've got this huge confluence of technical structure here with multiple fib ratios and the 200 period. We've gotten just shy of it, but that's ARC to Bitcoin, one to keep an eye on. And then I had PIVX, which is one that I was not familiar with. So I went back to my list. I have I have it against the dollar. So if we go back to our list, I was coming down here, I was looking at it, and I was like, oh, that's interesting. That's kind of the retracement profile that we look for. We've had insane upside, 21,000% upside, but we're down for the day, down for the week, down for the month. But 3 month, 6 month, and year to date is just an insane upside. So that caught my interest. So I went over to CoinGecko. Let's have a look. Okay, it's 58 on their scale. I like to look at that. Okay, interesting. You read a little bit about it. I would encourage you to do that. I won't take the time to do so, but definitely worthwhile to check out their website. Some of the metrics here, 22,000 Twitter followers, very active amongst the programming community. Definitely one to keep an eye on. So I went and pulled it up and said, all right, anything interesting there? So let's look at it. Since we're kind of just reviewing, I had to go all the way back to try and get. See, you gotta get it over here to the sideline and try and blow it up. There was a low. I can reset it. The lowest low I can find. Trust me, it's there. All right. All the way up, all the way back. Here's that 50. Here's that 50 of the all the way back. Right, which would be just above this pivot here. And then I went to the one that I could see the last time before we started this sequence. And we see here now we've just come to the 50 there, and here's our 200 period. So is there a trade there? I wouldn't. Let me open it up a little bit. That's an 8 hour. On a straight fib pull, yeah. Is there an Elliott count there? Let's go down to a 2 hour. See it. Well, we get a three wave. Here's the A. Here's the very common B wave up into the 786. Here's the 23 of that. You know, A, B, here's some sort of a C. We could be going complex here. This could be WX. We're into a Y here. It's, you know, hard to see. Here's what I do see. I see three-wave correction here. So when in doubt, you know, where can I see threes and fives? Can I see threes and fives? So if I just pull off of that and I go here, now we get a little bit beyond. That's somewhat bullish. But if I go to my all the way halfway back, look at that. So right to the 618, you know, to the tick. Right? That's why you got to check them. So algo's working from the all the way halfway back. Do I want to be a buyer at that 50? No, because those algos are not finished with that until we get down here to the negative 23, which happens to be down in this zone here of the 61865. So not a buy there, even though I like the long-term story. I'm gonna wait until we get down here. Because of that, even if I just put a channel on that, right, and I know that gets really cluttered. It's hard to see it all. But there's our 618. Here's our target on the 23. We're blowing through. We're sitting at the 50 of the all the way halfway back. So I can take that off just to declutter a little bit. So there comes my target. And I could have a 1, 2, 3, 4 ending diagonal. A diagonal of some sort, right? Because we've had the big overlap here. So we've got a 1, 2, 3, 4 corrective ABC right into the 618, coming down for some sort of a fifth wave structure down here. So anyway, there we go. That's 26 minutes. Kind of a recap. There's nothing new today, so I thought we'd just look at some things technically, try and reinforce these same habits of how we analyze the markets, and perhaps we'll get some more clarity over the course of the weekend. Okay, guys, I'll wrap it up there. Anything in particular you'd like me to take a look at, just shoot me a DM on Twitter or an email, and just reach out to me and let me know what you've got an eye on. Okay, guys, we'll talk to you soon. Bye.